Now for more is Jameel Ahmad, Chief Analyst at GTC. Welcome back to the programme. Now, there's been a massive crash in silver prices. Is this just leverage washing out, or is the bull run finally over?
Well, we have to take into account that there is temptation to take profits on an asset that has now tripled in value over just the last year. If we would have this interview 1 year ago, we were talking about silver prices that were basically very close to nearing 30 US dollars. This interview now, we're just below 90 US dollars, but as you've correctly pointed out, the price actually went well above $100 just a couple of days ago. Yet we still have had close to maybe a dozen moves now over the past 1 month that have been swings of 5% in either direction. That is quite spectacular volatility for an asset that is not known to be volatile. So I do think there's some technicalities behind that trading desk as well. But overall, I'm not going to say that we're completely over with this bull run, but silver prices probably did overshoot as high as they could get for now.
Right, and gold is holding onto those gains above $5,000 as silver falls. So what's driving this rare decoupling of the two metals?
Well, essentially, a lot of themes that have supported gold over the past 1 to 2 years are still in play. And we're looking very closely now at policy uncertainty that continues from the Trump administration, specifically the weaponization of trade tariffs and other tactics to basically enhance some diplomatic leverage. And we're also quite concerned over what might happen with the US Central Bank later this year with the Federal Reserve if that new chair does get nominated. Could he be somewhat under the thumb of the US president? That doesn't appear to be the case, but those are just some of the factors that are still supporting some sentiment towards gold. And then you have other factors too, such as central banks buying, institutions still very heavy on gold. And I just think we're seeing a lot more diversification across portfolios, which is why although gold, again, it looks very giddy above 5,000 US dollars. These are numbers that we've never seen before in history. But a lot of those factors that had helped gold in this tremendous rally over the past couple of years still remain in play. And that's why investors are still somewhat optimistic, although there is, of course, temptation to take profit. But I just think the dynamics are a little bit different between gold and silver overall.
And looking at oil prices, do you think the market is being too optimistic at the moment about a US-Iran deal?
A little bit, or we could flip the question in another direction and say that actually the market is not pessimistic that we're actually going to see another geopolitical conflict break out. I think it's somewhat of a positive that you're seeing those talks between Tehran and Washington are still scheduled to go ahead tomorrow in Oman. I think that not enough geopolitical risk premium has been priced into the market. We've only seen swings of 2 or 3% in oil prices. I mean, this week alone, we've ranged between $66 and $62. That does not suggest that institutional investors or investors overall are that concerned about the situation in the Middle East leading to a potential military intervention or other forms of means when it comes to Iran.
Right, a lot of volatility across the board there. Jameel Ahmad, Chief Analyst at GTC, thank you very much for joining us.